Welcome to the Real P&L Trading Show, where I share my account and my P&L on 3 accounts and share my proprietary Safe Whale system for free. Please type in the chat that you can hear me okay. I want to make sure my audio is up and working. Also, again, like I say, always be sure to post any questions you might have. I want to make sure that any questions you have get answered. And if you post them earlier in the broadcast, I can get to them. If you post them late, sometimes I don't get to those questions. So, what happened last week with the earnings edge? I traded AMD. You can see it here and made $496. So that was a profitable trade. And let's take a look at the spreadsheet. Well, let's show you this here. My net lick, 10,157. All right. Let's put that into the spreadsheet, 10,157. So far, AMD 496. Here, my record's 21, 20, and 6 since I've done my last update in late 2022. And what was it? $10,157. $10,157. Okay, I'm looking at the comments here. Small delay. Okay, yeah, you guys can hear me. Okay, good. Earnings edge 10,157. What's the S&P trading? Or SPY. I always like to use SPY. 510.38, 510. Oh, it's up a little bit, huh? So you can see the earnings edge vastly outperforming in 2022, underperforming a little bit in 2023. 2024, pretty much even with the S&P. Again, this is more risky than the S&P. So on a risk-adjusted return, the S&P is outperforming here in 2024. But when you look at the totals from 2022, of which I've been showing my account live, you can see I'm up over 100%, and the S&P is up 7.5%. So even on a risk-adjusted return, even though it's more risky, you can see some vast outperformance here with the earnings edge. All right, Premier Level 5. Let's talk about the Premier Level 5. And that is an Interactive Brokers. So let me refresh this. So you can see, this was in March of 2018 is when I kind of started adding to this particular, taking some of my positions and putting it into this account. You can see the account value is $34, 34,036. So let me put that in there. 34,036. You can see I'm down 3% this year. We had quite a bull run over the last 6 months before we got to April. We had about somewhere around a 25% bull run without, the largest pullback was 2%, and it happened twice. So the PL5 doesn't do as well. It's not like I lose a lot of money or anything, but it doesn't keep up as well when there's not any volatility at all in the market, and the market just shoots up like crazy. But I'm confident it'll catch up this year. You can see how it did. I opened it at April 8th, 2022, and you can see where it went up 12% there. The market was down 6%, and then last year underperformed, even though on a risk-adjusted basis, because the drawdowns are about 1/3, so you can multiply this number by 3. But underperformed in 2023. I've since tweaked the program. So 2023, actually, with the back test, would have actually made more money than this since my last update to the trade program. But those are the real numbers that happened in 2023. And now we have 2024. So overall, again, about 1/3 the drawdown. So you could multiply this times 3 for a risk-adjusted basis. So on a risk-adjusted basis, it's outperforming, but nominally it's not outperforming the S&P. Uh, this is the PL5. But I don't have those drawdowns. Like this is the largest drawdown I've ever had. Like I think it was down 5%. Like I don't draw down. The system doesn't draw down. That's what I like about it. And you can see here how it's doing up around 1% since, I'd just call it since April basically. Because I haven't had my full. I had half my positions in my Toss account, half of them in this account. So I mean, this is kind of whatever. But once I got all my positions into the account, you can see it's doing better. Okay, let's talk about now the safe wheel. Let's go into the safe wheel account. What's going on with the safe wheel? 6,491 is the net lick. 6,491. So let me go pull up my spreadsheet here. 6,491. Oh, so it's down some. Okay, 6,491. All right, so you can see here 2022. I started it in January, 20% versus minus 20. Underperformed here in 2023. Boy, the S&P did well in 2023, up 24.5%. And now this year to date, underperforming a little bit here, but overall up around 30%, where the S&P is up 7.5. So, vastly outperforming since I started the system in 2022. And that's the safe wheel. So what's going on with the safe wheel? Right now I'm trading LI. You can see LI is actually not doing as well year to date, down $400. So I stuck with LI last week. I think it was last week when I could have went to a different underlying, but I stuck with LI because I want to show that it doesn't matter what underlying it is. If it fits the parameters, being between $20 and $40 and has a certain volatility, then I can make it profitable. Well, it's not that I make it profitable. It's just the rules eventually will make it profitable. So what's going on with LI? I have a long call, which expires at the end of the week. And I have my put hedge at the $20 strike level. And last week I sold a put, and it looks like that put expired worthless. So I'm going to sell another put. Okay, so where am I going to go with this? I have my hedges in place. So the question about the hedge is, number one, is it under 100 days? No. So it's not depreciating too fast. And then is this $20 put within 70% of $26.21? So let me see if I can get my count. I'm going to run that here. 2620. 26.2 times 70% is 18.3. So the hedge is within range. If it was under $18, it would not be close enough to the money to protect my position, and I'd have to move it. But it is close enough. So now that my hedges are intact, I'm going to run the traditional wheel. So I'm going to go ahead and sell a put because I'm opening a new position. And I like to do everything in the nearest expiration cycle. Trading LI. So this is the nearest expiration cycle. This is where I want to sell my premium because it expires at the end of the week. And I want to sell a put. I want to get at least 26 cents for it. I can get this. I can sell the 24.50 put here and get the premium that I want. But I always like to go up one and get a little more premium and a little closer to the money. I'd prefer, obviously, to get as far out of the money as possible and get the premium, but I want to get a little more premium here. So I'm going to sell the 25, and I'll talk about sizing here as I go through. I'm going to sell one put, looks like 40, 41, try to get 41. Looks like it's at 40 now. One put. Now I'm going to do one because I have between $5,000 and $10,000. Okay, that filled quickly. So I got 41 cents. So I collected $41 here. And because I have between $5,000 and $10,000, I'm going to do a ratio of 3 put hedges and 1 contract on my traditional wheel portion, which would be selling a put. If I get assigned, I'll sell 1 covered call. And of course, I have room to be long 200 shares where the system has already been sized out. By the way, if you want the fast track to this, and it comes with a flow chart and everything, you can get access to it. Or you can just watch my live streams and eventually learn how to do it for free. Okay, so that is the safe wheel, right? Talked about that. I got the P&L, net lick. Let's go over some comments. The dude says he's first, and then the shovel said he was first. So, okay. Some guy got the sound going. Okay, some guy says, Carl, why did you close out your EE/AMD trade when you did? Okay, good question. I think it was Andrew or George, I can't remember who it was, that kind of came up with a different rule on exiting that I have. And I like their rule. I like that rule. And I've decided to start applying that rule. And if you're in the Earnings Edge program, I'll obviously explain that rule to you. I'm not going to do it live here. But that's why I was following that particular rule. And inside of Circle, go ahead and just DM me or ask the question in the forum there, and I'll definitely answer what that method is. I think everybody in there knows that method because I talked about it. Kevin, good morning from Lakeview. Charles says, can you please show your P&L curve, not the risk profile, for your Earnings Edge and Safe Wheel? So my P&L curve, where would I get that? You have to show me. You have to tell me where I would show that. Not sure where that is. Maybe under the analysis. I'm not sure where the P&L curve. What you mean by that? Let's see here. P&L curve shows the cumulative profit and loss over time. Cumulative profit and loss over time. Well, I should know where that is, but I don't. You just tell me where it is, and I'll show that for sure. Will, how is LI vol? Did it drop last week? I don't know. Let's see. LI vol. Let's go to the chart of LI and look at it. No, it doesn't look like it. So this is the vol here. Doesn't look like it really dropped too much. Kind of elevated and kind of hung out up here. Steveville says earnings on LI is May 8th. Okay, so May 8th coming up. Yeah, it looks like it's in here. Okay, interesting. I'm not going to change anything that I'm doing for earnings coming up. Sometimes if you were maybe stuck in the middle of a position where your put hedge isn't really paying off, it's kind of breaking even, and you're kind of own 200 shares, you can't really sell any covered calls. It's nice when earnings come up, because you might be able to sell covered call because it's more premium, or the stock's going to move up or down, which is going to help you. With the traditional wheel, you basically become directional when you get assigned, but with the safe wheel, you're not really tied to direction. Will, in your line of work, how are your nerves when others count on you with their money, like hedge fund managing? There's some pressure there for sure when I have other people's money at risk. I don't have a lot of other people's money at risk with the hedge. It's not really a hedge fund. It's a managed account. That particular business of mine is, I've not really been focused on it. I've been focused on my uh, YouTube business, my online business a lot. So I don't have a lot of clients with that, but definitely it's can I can feel the nerves right now just thinking about it because I just other people's money. That's just a different ball game. Sandra, if the put hedge were 30% above the stock price, will we also adjust the put hedge to a lower strike? No, when the put hedge is at a level, if it was 30% above, that means you would be long 200 shares at that point. And when the put hedge is higher profit than the loss on the 200 shares, you would exit. Because during all that time you were collecting premiums, so you should be ahead, right? So you wanted that put hedge to basically get you to break even on the shares. If there's like a crash scenario, the put hedge is going to outperform those shares, the loss on those shares. Will says that's one small hidden P&L for a man, one giant conceal for mankind. Neil Armstrong. Okay, Will. Um, oh, Avery says that I'm trying to look for the equity curve. Oh, okay. So I'd have to go into my other accounts through my Thinkorswim through the. It wouldn't be in here, in TOS. It would be in going through the website. So I would have to log into the website and show that. Let me see. It would take me a minute to do that. Let me see if I can get there real quick. If not, I'm not going to do it. But I have to just give me a second here, and I'll actually find that. The equity curve. I think that's interesting. I think that would be a good thing to look at there. I actually show that every month on my real P&L videos. So I'll let you see it there on a monthly basis. I show that equity curve. So I think that's a good place to see it. So if you go to my monthly P&L videos, that's when I show my equity curve there, which I believe would answer that question. Prashant, sir, I think you provide good insight. I'm from India. How do I translate your methods into my growing economy, and how will I capture this opportunity well? Well, so growing economy, basically, when I hear that, I think of you're thinking directionally, you want to go long. And this isn't really about going long or short. It's about picking the right underlying, following the rules to pick the right underlying that gives you the liquidity, and also you got to have some premium too to sell. I don't know stocks in India. I don't know anything really about any particular stocks over there. So if you could trade the U.S. market, then I know this market, and I could obviously you can see here I have a list of potential stocks here for the safe wheel. But in order to get like the fast track and understand the safe wheel, I would recommend just getting the course. That way you can get the filters and you can go through it, and it'd be a lot faster than trying to learn here. You can learn here. You would need to go through quite a bit of these live streams. But as far as Indian stocks, there might be some that will fit the criteria. I just don't know. Charles says the P&L curve is not in TOS. Yeah, you have to log into your online account. Right. Exactly. And again, what is this, the 29th? I mean, I think probably by the end of this week, I'll have a monthly P&L video out, and in that I will show the equity curve. That's what I do. I show the equity curves in those videos. So once a month, I show the equity curves. At TD is called the balance history. Yeah. Less is more. I've continued along with DKNG. Let's see, DKNG. That was looking at that the other day. Uh, $44. So it's outside that range. So I really wouldn't want to hang out with that stock from a sizing point of view. That's interesting though. So you're assigned at 45. At what strike would you consider selling a covered call with the prices available right now? How high of a strike would you go? Oh, I see what you mean. Okay, well, let's take a look at that. So let's go DKNG, and you're selling a covered call. So right now, 44 cents. So you could do the 49.50, right? That's what you could do. This thing must be coming into earnings or something because it's got a lot of premium. But you could do this one, right? The 49.50 because it's giving you enough premium. And then I like to go one back or one closer to the money, right? So I would probably do the 49. So you're still collecting a decent amount of premium, but if you get called away, you got a nice profit there. So I liked because the system's really predicated on getting called away at a distance. That's kind of where most of the money is collected on this system. So I like to do that. I'd probably do the 49. Some guy says he builds his equity curve in Excel. That's cool. From my trading log, I'm assuming you say log. Okay. Dude, what's the max commission in percent, in your opinion, when it comes to options? I'm realizing that even stocks like BABA oftentimes demand very high commissions. So what's the max commission in percent, in your opinion? Well, the way I think about it is if I like the platform, I'm probably willing to pay the commissions for that platform. So I don't really think wherever I can get the best commissions, I'm going to go to that broker or that platform. I don't think like that. I think whichever platform gives me the best way to navigate through my trades and trade them and execute trades, then I'm going to go there because they're all relatively competitive. I mean, it's close enough for me. Obviously, like Robinhood, you don't pay any commissions, but you've got that you pay for order flow, so your bid-ask spread, your slippage is higher. You end up paying anyways, pretty much. So I don't chase commissions per se. I chase the platform. I did chase commissions using Interactive Brokers from Thinkorswim because when I trade options on futures, the commissions are just stupid high. I mean, it's just outrageous. So I moved over to IB. So that is one time when I did chase commissions, but most of the time I'm chasing the platform. That's a priority. Charles, when you show your equity curve each month, you only show that month. Seeing the long term would be helpful in visualizing the volatility. Oh, I see. Okay. Well, if you want to bear with me a second, I will go into that. Just give me a second here. TD Ameritrade's changing over to Schwab, so hopefully I'm going to get... Yeah, it's already... Wow. It's looking totally different, which is not cool at all. Let's see here. Yeah, I'm not even used to navigating this. Yeah, I'm not going to do this live. I'm not used to navigating through the Schwab looks like Schwab kind of changed it up a little bit. It used to be right when you log in, you'd see the equity curve right there on the spot. Now it's kind of different, which I don't like, obviously. Okay, well, that's what's going on with Schwab, unfortunately. So I'd have to navigate through there and find and look at the equity curve and then pull it up. So I'm not ready to do that because I haven't done that before because it's different. So Prashant, how do I access the course? There's a link in the description of this video, which will get you to anywhere you want to go, course-wise. Or you can go to my website called real-pl.com. Prashant says, what are your opinions on naked options? Currently, all I do is scalping, and I want to grow into a better trader. I don't sell naked options. I am 1000% against selling naked options. You could have sold a naked option at the, say, for $1 for the crash of the COVID, and you would have sold that and it would have turned into $90. You don't want to sell something for $1 and try to buy it back for 50 cents and then it's worth $90. I don't sell naked options and I don't recommend it at all. Actually, you can see I kind of got mad about that. I don't know why. Charles, thanks for taking the time to respond to my questions on your equity curves. Maybe just show longer look backs on your monthly summary videos. I might shoot that out there, or next week, if you remind me, I might try to navigate through it. Because I'm definitely think that, if you want to see that, I want to show it to you. Sandra, how do you test an option strategy? Do you use a software or do you need to code it directly? I use a software called OptionNet Explorer. And if you go through my channel, you can just put OptionNet in the YouTube search. You can just put my name and then OptionNet Explorer. And I did a video on why I use them and some of the details of what you can do with that software and why I recommend it. The dude says, thanks for answering. I actually meant slippage. Oh, okay. So I'm practicing on IB, and the slippage for BABA call spread is 3. Okay, so let's look at BABA real quick. You're saying the slippage here. So typically when I'm looking at slippage, what I look at is the difference between the bid-ask spread out of the money. You can see this is between 40 and 42 cents. This is 25 to 26. This is 65 to 67. This is not bad at all. 1 cent difference, 2 cent difference, 3 cent difference. You're going to pay a little bit of slippage, but not too much. This is doable. Let's look at Apple. 53, 50. Okay, this is still the same. You're still 3 cents here, 1 cent here, 1 cent, 1 cent. This is very liquid. SPY, for example. This is going to probably be as liquid as you can get. 9, 10, 11, 15, 16, 19, 20. See their 1 cent difference? That's when you're not going to be paying much in slippage at all. There could be, let's look at IBM. 25 to 28, 76 to 80. So the slippage here is a little more, right? Because the difference between the bid-ask spread. With the earnings edge, I don't really like to see anything over 4 cents when you start getting out of the money. IBM is 4 cents here. Here it's 2 cents. So it's doable. But once you start getting 5 cents, like some of these will say 25 and 30, 75 and 85 cents. I won't trade those, not liquid enough. So I hope that answered your question. Thanks for responding to my question. I understand why you would get mad. I don't like that either. And I know it has its flaws. I mostly buy options, haven't sold any. Yes, if you look at my trader matrix, where it started out where I went through the same thing. I was a fundamentalist, right? I would watch the NBC and pick a stock. And then I found technical analysis and I drew charts and things like that. And I used charts and that didn't work for me. Then I found options and I started buying options. but I realized that that was a low probability situation. So then I realized, hey, I could sell options and have an edge. But then the problem with that was I wasn't hedged, right? So if the market crashed, I'd be in big trouble. And so then that would be level 4. And now I'm a level 5 trader where I sell premium, but I'm also hedged. So that's kind of the learning curve that I went through. So I was where you're at, where I would starting buying options because I saw that leverage, right? But you have to understand you pay for that and you overpay. You overpay for options about 75 to 80% of the time based on the implied volatility versus historical volatility. Leo, do you do any coding for backtesting? I don't. My daughter is involved in some backtesting and some coding, and then we have uh, an intern that we currently have, and he does a little bit of coding, but I don't really rely on coding right now. Um, there's a nice coding backtesting software called Mesosim, which is pretty good, but I haven't mastered that. And I really like to do it manually because if you do it manually, it's as if you're making the trade, you're executing that trade. Um, and if you're executing each trade individually each time, you learn it a lot better than just running a back test where you just put in some parameters and press a button and it does the back test for you. It's nice to have those results. But if you do it manually, you learn that trade really, really good. And I think the key is not just getting the results, but it's also understanding and learning the nuances of the trade. So that's one reason why I like to do it manually. But it is cumbersome and it takes a long time. So there's advantages and disadvantages for sure. Lee Dude says, thank you. You're welcome. Okay. I don't see any other questions or comments coming through. So I am going to wind this thing down. One thing I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week.